And those were often periods where Bitcoin started that period dramatically overbought. And so basically, regardless of ongoing good news for Bitcoin, it would fall back down because it was starting from an unsustainable position. So I'd say when you look at I would say global M2 and overall liquidity is a really powerful variable to be aware of when trying to estimate Bitcoin price action, but it's one of a handful that you should look at rather than just the only thing and just overlay two charts and call it a
Mm.
thesis.
Hey guys, welcome to Everyday Finance. As it surpasses its previous all-time highs, Bitcoin is once again grabbing attention from both institutional and retail investors. Although a lot of the coverage is still focused on price action, macro strategist Lyn Alden provides a more thorough and structural explanation of her continued optimism regarding the asset, predicting a possible move to about $150,000 in the upcoming year. Alden's argument departs from the usual technical or hype-driven analyses that predominate in the conversation about cryptocurrencies. Rather, her perspective stems from significant macroeconomic changes that are reshaping the world financial system. She highlights how the post-Cold War unipolar era is coming to an end, and that a more fragmented, multipolar world with growing influence from China, India, and other emerging markets is replacing the US. Yes, dominance in trade, military, and monetary policy. Traditional safe havens like the dollar and US treasuries are becoming less appealing in this changing environment. With structurally higher interest rates, ongoing inflation, and widening fiscal imbalances making sovereign debt less appealing, the 40-year bond bull market seems to have reached its end. In response, central banks all over the world are raising their gold reserves, which is a blatant indication that trust in traditional financial products is declining. In light of this, Bitcoin is becoming more and more regarded as a neutral, non-sovereign store of value that is similar to digital gold. This makes it especially attractive to countries looking for alternatives to the financial system that is dominated by the United States. Bitcoin provides a way for nations under economic sanctions or on the geopolitical periphery to settle trade without relying on the dollar. Decentralized monetary networks like Bitcoin are becoming more legitimate as global confidence in centralized institutions declines. As a result, Alden's bullish forecast is more than just a price prediction. It is a macroeconomic signal that emphasizes a profound change in the global reallocation of capital and trust. Her research highlights Bitcoin's increasing significance as a strategic hedge in a world going through significant change, in addition to its growing significance as an asset class.
So I'm not surprised. I do think that the market is seeing that more. So for much of like say 2020 through 2024, the biggest driver was liquidity, just because there's so much macro stuff happening. It was either like flooding into the market like 2020, 2021, or being rapidly pulled out of the market like 2022, and then like gradually put back into the market like 2023, 2024. And that would make like the Bitcoin and the Nasdaq basically go up and down together, just at different magnitudes. But then there are some things that can negatively hurt one and not the other. And so, for example, if you go after corporate margins, that's worse for the Nasdaq, whereas Bitcoin has no margins; it's money. In addition, it's a global asset. So in order to buy Nasdaq stocks, you got to buy dollars and then buy the Nasdaq. Whereas Bitcoin, even though dollar's the biggest trading pair, I mean it's a global asset like gold. There's exchanges around the world that you can buy it at. It's not explicitly tied to the dollar. And so we saw, for example, during the initial volleys of the trade war, there were capital outflows. So stocks went down, bonds went down, the dollar went down together, as something you often see in emerging markets when there's just kind of global capital coming out of that market. So we had a little bit around the margin just kind of pulling out. And Bitcoin's a global asset. So much like gold, it kind of held up well in that environment. Another way to describe it is that when liquidity conditions are decent, as they have been, and yet there's other reasons to be bearish. It could be stagflation. It could be trade like tariffs on corporate margins. Then that's good for Bitcoin, which benefits from that liquidity. but it's negative for certain stocks. And I think that's what we've seen. So there are types of things that can decouple Bitcoin from the Nasdaq or from the S&P, and this type of period is one of those. Um, and so I think that's the case when you're bullish on liquidity, but you're not super bullish on margins, then Bitcoin is often a better play. Um, and there's also like this idiosyncratic things with the market. So there are times where Bitcoin's overbought and it needs time to cool off for a period of time. And we kind of went through that. So it got overbought in March 2024 after the ETF announcements and launch. People were really bulled up and it kind of got frothy. There are multiple metrics I look at that kind of quantify this. And then it went through a 7-month consolidation. And then, when the election happened, it's more pro Bitcoin, pro crypto administration. We got another kind of a catalyst to be bullish again, but also we had worked off all of that valuation excess since March. We popped up to something like 108, 109K. We got to similar levels of quantitative frothiness. And so we consolidated, going into April. And a lot of that's worked off now. So it's just partly it's its own kind of market going through periods of overbought, periods of being forgot again. And I think most metrics look at a pretty good place for Bitcoin. I'm pretty constructive with a 12-month view.
Where do you see it within the 12 months, like in the range?
Bitcoin does Bitcoin things. I try not to judge. I think we're going to see new highs in 12 months, within 12 months. I could be wrong, but that's my base case. Something like 150,000 wouldn't surprise me. But I try not to give specific price targets because you can have a liquid moves that bring you up way higher, or you could fail to reach those moves. But I'd say 12 months is bullish, is my view. So I think there's something to it, but I think you can't over rely on it. So we actually did a study. I partnered with Sam Callahan to have a study happen, and it did show that Bitcoin in say 6 and 12 month periods is more correlated with global M2 than other large assets. So it's more positively correlated with it than gold. It's more positively correlated than S&P 500. More positively correlated than bonds and foreign stocks. So about 87% of the time, Bitcoin price will move in the direction of global liquidity within, say, a 6 to 12 month period. And that does not mean that on a week by week basis, it'll track it. Sometimes it will, sometimes it won't. And it's not the only variable. So, if Bitcoin gets tremendously overbought as it has in some prior periods, then even if global M2 keeps inching up, there's a good chance that Bitcoin can correct. So we actually analyzed those 17% of periods where Bitcoin did not correlate with global M2, like it moved in the other direction, and those were often periods where Bitcoin started that period dramatically overbought. And so basically, regardless of ongoing good news for Bitcoin, it would fall back down because it was starting from an unsustainable position. So I'd say when you look at I would say global M2 and overall liquidity is a really powerful variable to be aware of when trying to estimate Bitcoin price action, but it's one of a handful that you should look at rather than just the only thing and just overlay 2 charts and call it a thesis.
The foundations that once made U.S. Treasuries a pillar of safety and stability are starting to fall apart as the global financial system shifts away from its long-standing dollar-centric foundation. We are seeing the structural end of a 40-year bond bull market, which started in the early 1980s and was marked by disinflation, declining interest rates, and broad economic and geopolitical confidence in U.S. sovereign debt, according to macro strategist Lyn Alden. Alden contends that those tailwinds are currently reversing. Inflation is still high, interest rates are no longer trending lower, and trust in sovereign debt, especially U.S. obligations, is declining. Because of this, capital is increasingly looking for harder, neutral stores of value that are independent of the fiscal credibility of any one country. A renewed interest in neutral reserve assets is being fueled by this environment. Central banks are turning back to gold, a tried-and-true store of value that is unaffected by sovereign risk, especially in developing nations. Bitcoin is becoming a viable, albeit still erratic, alternative to gold. In a multipolar world where countries are looking for alternatives to the dollar-based system and are growing more cautious about depending on politically influenced monetary networks, its open-source, permissionless architecture provides special usefulness. Alden stresses that this change is not an abrupt interruption, but rather the inevitable result of macroeconomic forces that began more than 10 years ago and are currently gaining traction. She emphasizes that Bitcoin's increasing significance stems from both its price potential and its compatibility with long-term structural realignments in international capital flows. Her next analysis links the trajectory of Bitcoin to global M2 trends, emphasizing how global liquidity expansion could encourage the adoption of digital assets even more.
So I don't think so because we've had gold-backed stablecoins for years now. That they're already out by a hand. Like Paxos and Tether both have gold-backed stablecoins. I think they're a useful product. I think it's good that they exist. They serve a niche. They're basically, you can think of them as like gold ETFs, except that they're not tied to any one country. Right. So if I'm in the US and I have a gold ETF and I can't really bring that. I have to like sell it and go somewhere else. Whereas if you have that token, you could be in Lebanon and have that token, and you can go to somewhere in Europe and you still have that token as long as you're not in a place that Tether's like actively sanctioning you, for example, because of government pressure. At the end of the day, it's still a chain of credit. It's just a slightly more portable one than say ETFs. So I would say that it's tokenized assets in general, rather whether it's tokenized dollar, tokenized gold, tokenized S&P. The big value there is it allows people in certain markets to access them when it would otherwise be harder to access them. So they do serve a purpose. But it's fundamentally solving a very different problem with Bitcoin than Bitcoin, which is basically Bitcoin is an asset that's not credit. It's not like a token that someone legally owes you something. You hold the key, then as long as the Bitcoin network is functioning, you're the only one that can control that Bitcoin. You can self-custody it. And so it's kind of like physical gold in that sense with pros and cons. Like, gold has thousands of years of history, it's physical, whereas Bitcoin is portable. So, for example, when I go back and forth between the US and Egypt, I can't realistically bring my self-custodied gold with me, but I can bring my self-custody Bitcoin with me. Or, for example, I can have a 2 or 3 multi-sig where I have one key in the US and one key in Egypt and have one key with me, and basically have control of my Bitcoin wherever I am. There are options like that someone can do that you can't do with gold. So different assets, different purposes. Ironically, Bitcoin. Bitcoiners are focused on it, but TradFi, because it's been flat since November of last year, it's off the radar. Also, I think that like Brazilian stocks, for example, there are certain emerging markets that I'm bullish on with a 5-year view that just they're completely underowned. Nobody cares. No one talks about them. You won't see them on CNBC, and so they're pretty I'm pretty bullish on them.
For investors observing Bitcoin's development on the international scene, macro strategist Lyn Alden highlights a crucial relationship: its long-term correlation with the global M2, or broad money supply. Bitcoin has historically experienced upward price pressure in response to increases in global liquidity, highlighting its sensitivity to macroeconomic conditions. However, Alden warns that this relationship is not unqualified. The deployment of liquidity is just as crucial as the supportive backdrop that rising M2 can offer. The price of Bitcoin might not move in tandem if capital is idle or is diverted because of risk aversion or geopolitical tensions. Her method offers a sophisticated framework for comprehending Bitcoin's position in the global financial order by combining liquidity analysis, capital flow dynamics, and the larger geopolitical environment. Raoul Pal, CEO of Real Vision, provides a more straightforward explanation. He believes that the main factor influencing all risky assets, including Bitcoin, is global liquidity. Powell claims that when central banks inject liquidity through rate reductions, quantitative easing, or balance sheet expansions, assets increase virtually automatically. His models, like the Global Liquidity Index, show a direct correlation between rising asset prices and monetary easing. Alden's thesis takes into consideration structural changes like reserve diversification, the decline in confidence in sovereign debt, and the rise of decentralized financial alternatives, whereas Powell's perspective is more cyclical and policy-driven. Despite having different approaches to analysis, both specialists agree on one thing. Bitcoin is evolving into a macro asset that reflects significant changes in global capital flows and monetary trust. Rather than being merely speculative, Bitcoin is increasingly serving as a gauge of structural change and economic sentiment as central banks rebalance and the financial system shifts toward a multipolar reality. These viewpoints provide crucial insight into how Bitcoin is positioned in the context of the global financial transformation for investors observing the nexus between digital assets and macroeconomics.